If you show me a hedge fund that makes $1 billion in an opaque way, I don't want to invest a dime in you. I would rather invest in a guy that loses $1 billion in a way that I understand. It's like, oh, Bitcoin traded down $1,000. Oh yeah, you just lost $1 billion. You know, Bitcoin, when Bitcoin moves like $2,500 down, we lose $1 billion. And what I've said, and I said this to Tucker Carlson on television, I said, I'm going to be buying the top forever. I mean, here's what I tell you. When Bitcoin's $1 million a coin, I bet you I will probably buy $1 billion of it at $1 million a coin, probably in one day.
Yep.
And when it's 2 million, I will probably be doing it again in one day. And when it's 10 million, I will be doing $1 billion or more in one day. You know, BlackRock or someone else, I envy them because they have more capital, but it's overnight deposits.
Right.
Okay, so you could have, what would you rather have, $100 billion in overnight deposits in your bank or $50 billion that you have forever that no one gets back, right? So we have the permanent capital. We can lever it. We have the option to lever it. The combination of those things means that even if we weren't levered, I think we would trade at 130% of Bitcoin vol.
Yeah.
Because just of the uncertainty.
Right.
But when you layer a little bit of leverage on top, maybe you get to 2x, and maybe you could get to more than 2x. You might get to 3x. The thing that I try to get across to people with the laser eyes and the focus is sometimes the least risky thing is not to diversify.
Right.
When you've got an engineering solution, when you're building an airplane and someone says aluminum is the right metal, diversifying into copper, bronze, steel, and aluminum doesn't make the plane less risky.
Right.
Right? You don't need, it's not like this, everybody's got to have their turn. We gotta like use a little bit of art and a little bit of real estate and a little bit of gold, a little bit of Bitcoin and a little bit of NVIDIA stock, right? That doesn't work. It breaks the machine, right? It's the homogeneity of the fuel, right? We don't put 16 different types of radioactive elements into the, pick the thing, engineer the reactor for the thing. So what we've done is we've focused on Bitcoin. We've created a Bitcoin treasury company. It's a crypto reactor with Bitcoin as the fuel. Because we do that, we can give our converts the highest performance of any convertible bonds. And we can give our fixed income the highest performance of any fixed income. And we can give homogeneous credit and transparency. And here's the other point I make. A lot of times people come and they're like, I want to do the Bitcoin standard thing, but I think I'm going to hedge. I'm going to put in this put hedge thing. Or maybe I should do some of this and some of that. I'm like, no.
That's not the engine.
No.
Yeah.
No, don't. You don't hedge. You don't want to be 72% Bitcoin with 30% hedges on to generate guaranteed yield. You want to be 150% Bitcoin, no hedges on, because you're robbing the investor of their opportunity when you put your hedges on. Okay, so when I give you a 150% Bitcoin company and I don't hedge it and I tell you I'm not going to hedge it, you don't believe me for a while. You're going to rug pull me. You're going to take profits. You're going to, right? It takes a long time for people to trust you, right? But your best chance to get people to trust you is if you're laser-like, focused and committed and transparent, and you never break faith with them. They're like, by the way, this is tough love. When Bitcoin trades down 80% and you wanted me to bail out, I didn't. I'm sorry. All those bondholders, they came to me when the bonds were trading 30 cents and 40 cents, and they wanted me to issue equity to buy them back. I said, no, we're keeping our position. They said, well, this is a big opportunity for you. You could buy these bonds back below par. I said, no, this is a big opportunity for you. You're the convertible bond investor. You have to buy bonds with your capital for a living. That's your opportunity. My job is to issue the securities and stay long Bitcoin, buy Bitcoin, hold the Bitcoin, manage the structure, don't get liquidated. That's my job. Your job is to buy the equity, or if you don't want to buy the equity, buy the bonds. If you show me a hedge fund that makes $1 billion in an opaque way, I don't want to invest a dime in you. I would rather invest in a guy that loses $1 billion in a way that I understand. It's like, oh, Bitcoin traded down $1,000. Oh yeah, you just lost $1 billion. You know, Bitcoin, when Bitcoin moves like $2,500 down, we lose $1 billion.
Yeah.
But now I can go, you know, I go buy that.
Yeah, and everyone knows exactly why.
Yeah, it's like the world's got infinite capital. They want the security. So the real key here, if you're running a public company, is pick a strategy, solve a problem for the market, be consistent, reliable, trustworthy. And, you know, if the market trades down 90%, you know, the most lucrative trade in the world was like to buy MicroStrategy stock at the bottom of the crypto winter, right?
Yeah, absolutely.
Right? I mean, I think our stock got down to $13 a share. You know, not that long ago, $13 a share.
You're up over 400 right now. What's the pitch like broadly speaking for an operating company, not for a MicroStrategy or a MetaPlanet where it's a Bitcoin engine company at this point, but for like a Microsoft, like should they be doing 2%? Or should they be plowing a lot more in, right? I mean, I've seen the talks.
I think 2% is silly. I think traditional financial advisors that want to work Bitcoin into their talk scripts so they sound cool and
adding 1 or 2%
progressive edge,
can
say
improve
1
the
or
Sharp
2.
and whatnot.
That's buying an insurance policy, right? That's like me pitching you on life insurance just in case. I mean, it's not a way to live. It's not a, you know, you're not going to, you know, live joyfully forever and put your family, you know, you're not going to provide generational wealth for your family and put your kids through college and get a yacht and a 3rd vacation home and be universally idolized because you bought flood insurance. Doing mergers and acquisitions, 90% to 95% failure rate. Right? I mean, HP did a disastrous acquisition. I mean, the number of disastrous acquisitions where the company's overvalued by 2 to 10.
Yeah.
Most. Like, if I were to say 5% of the acquisitions are successful economically, I think I might be overstating the case, but I'd be very optimistic. But I'm sure 90 to 95% are a disaster. And you don't really know whether they're a disaster for like 2 to 4 years. So you can embark on that course, which is statistically, you know, a bad outcome, and it's a slow outcome.
It's costly just to effect.
And how many of these big mergers, they're still fighting in litigation over the merger to get approval or whatever, a year after they announce it. It takes forever. It's very dilutive. It's distracting. And most of the time, it destroys shareholder value.
Yep.
And so then that leaves you with the buyback.
Yeah.
Okay, you got a company, and you don't know how to grow the company with your cash, so you're just going to buy your own stock back. It sounds kind of good, but you're surrendering the capital. You're surrendering the capital. So if the company had, you know, it had $100 billion of cash, well, you know the company's worth at least $100 billion, but when you buy back 10% of the stock, the company has 0 or $1 billion in cash, or, you know, a razor-thin layer of working capital. Now the stock trades up 10% maybe, but the company has lost 95% of its tangible assets. How is that not riskier? What you're doing is you're levering up the company on forward expectations.
Yep.
We'll come back to Microsoft. Microsoft is just valued on expectations right now. If there's an antitrust ruling or a negative regulatory thing, a competitive development, a management failing, right? I mean, half of the market cap can just go away. Now, how do you solve the problem? Well, the conventional solution, if you live in a US dollar standard world and you're buying your stock back and dividending your stock back, or dividending the cash flows out, and you're holding a very razor-thin amount of
Working
treasuries,
capital,
then the way that you de-risk the shareholder dilemma is you require your customers to sign 3-year agreements, enterprise agreements. Then you bundle into the enterprise agreement 16 products, and then you build in escalators every year. And it becomes, you try to turn it into a real estate rental project, a rental company. And now the customer's got to buy everything you sell. And how do they not renew, right? That is the software as a service model that wants to be a long-term lease. Apple service revenue. We're just going to have Apple Prime, and you're going to buy, everything.
We're going to
and
put it all on the one device. You got to carry it
like
everywhere.
what's your monthly fee on that? You're going to cancel,
Right.
Did you buy the gaming thing that you don't use?
You get the iCloud data storage.
Yeah, okay, you just forgot to pay your bill, and of course all your memories disappear.
Yeah, exactly.
And your friends and your photos.
Yeah, it's a hostage situation.
Okay, so convert the cash, you make $1 trillion. Convert the dividend, you make another $1 trillion at another $150 a share. Convert the buybacks, you make another $1 trillion, it's another $150 a share. Take all that, borrow money at 4%. Microsoft could borrow money at 3%.
Yeah.
10% loan to value at 3%, invested at 30 to 60%. Make another $1 trillion. And so literally using the balance sheet doubles the value of the company. Instead of being valued 95% on expectations, you could get it down to 50% on expectations. And the other 50% is tangible assets appreciating, in the worst case, 20% a year, right? So that's the logic of a Bitcoin strategy. And of course, it's not a 2% insurance policy.
No.
It's a policy to increase the growth rate of the company by 50 to 100% and decrease the risk by a factor of 10.
It's how much Bitcoin will MicroStrategy have?
I laugh, Dave Portnoy complains about buying it at 10 and panic selling it. And then he's like, oh, I bought it at 40. And, I hit the wrong button, all these things. And now it's 100,000. And what I've said, and I said this to Tucker Carlson on television, I said, I'm going to be buying the top forever. I mean, here's what I tell you. When Bitcoin's $1 million a coin, I bet you I will probably buy $1 billion of it at $1 million a coin, probably in one day.
Yep.
And when it's 2 million, I will probably be doing it again in one day. And when it's 10 million, I will be doing $1 billion or more in one day. And I think 21 months is too short.
Yeah.
I think a lot of people fall into 21-week, 21-day, 21-month trap, and that paralyzes them. It's like Dave, I miss Bitcoin. He missed Bitcoin at 20,000, 40,000, 100,000. And my response is, Dave, you could still buy it for less than $1 million.
Yeah.
What the heck what's your issue?
It's currently trading at 0.1
You're getting a
million.
90% discount to $1 million. I'll be buying $1 billion at $1 million, so why just can't you man up? Buy $100,000 Bitcoin and quit your whining.